Hello friends, welcome to all of you Shiksha 360. Recently, RBI has increased the risk weight for the bank and NBFC. Basically, here what the RBI do, basically they have rolled back their decision which they have taken in the November 2023. So what I am saying here, let's try to understand what is the meaning of all these things. So first of all, I will show you the recent circular basically which RBI has issued on 25th of February 2025. That is exposure of scheduled commercial banks to non-banking financial companies review of risk weights. So what it says that the risk weight on exposure of scheduled commercial banks to NBFCs was increased by 25 percentage points over and above the risk weight associated with the given external rating in all the cases where the extent risk weight as per the external rating of NBFCs was below 100%. Clear? Basically, when they have increased, that is on November 2023. Now, what they have trying to say that on a review, it has been decided what they have increased that now it is to be restored. The clear that is it is to be now same earlier before that. Now, on a review, it has been decided to restore the risk weight applicable to such exposures, and the same shall be the external rating as specified. And when these instructions basically will effective, the above instructions shall come into effect from 1st of April 2025. What is the meaning of all these things? Let's discuss in detail here. So, amid crisis of the liquidity deficit in the banking system and funding crunch for the several small lenders, the Reserve Bank of India on 25th February reduced the risk weight on the bank loans to the non-banking finance companies and the microfinance loans. The central bank has restored the risk weights on bank loans to the NBFCs to the levels before they were hiked in November 2023. Clear? Basically, whatever the risk weights before November 2023, they have now become the same, which in the meanwhile period, they have enhanced by 25%. So the RB had in 2023 increased the risk weight for banks for the loan to the NBFCs and the capital that the banks need to set aside for every loan by 25 percent points to the 125% on the retail loans and concerns over a surge in small personal loans. So while certain categories like housing loan have been excluded from the increased capital requirement at the time, microcredit was not. And when the revised rates basically will be effective from 1st of April 2025. So now let's discuss with the help of the example what is the first, what is the meaning of the risk weight? So risk weight, what is that? It is a measure of the risk associated with the particular asset or loan expressed as a percentage. In banking, it is used to determine the amount of capital a bank must hold against that assets to protect against potential losses. Clear? How much capital basically bank will put aside for that particular loan. Clear? So that in the case the loan defaults, clear, how the bank will survive from that. So higher risk weight basically means banks need to hold more capital while lower risk weight basically require less. Clear? So now the RBI will have lower the risk weight. So bank will require less amount to hold and they will have more amount to fund. Clear? So that will lead to the liquidity increase in the market. Clear? So let's try to understand with the help of example. Imagine SBI has two types of the loans. First one, that is the home loan secured and personal loan unsecured. Clear? A home loan basically it is a secured by a collateral. Personal loan basically a loan without any collateral. So home loan basically because it is secured, it's considered a relatively low risk. Let's say that the RBI assigns a risk weight of 50% to the home loans. So if SBI lends 1 lakh rupees as a home loan, so they need to hold 50%, that is 50,000 as a capital reserve. Okay. On the other side, in the case of the personal loan, clear, they have to hold 50,000. Clear? On the other side, personal loan that is unsecured, since it is unsecured, it's considered high risk. So let's say the RBI assign a risk weight of 100% to the personal loans. So if SB lends rupees 1 lakh as a personal loan, so they need to hold rupees 1 lakh as a capital reserve. Okay. So this is the meaning of the risk weight. Similarly, as per the RBI norms, for all the loans given to the NBFCs by the scheduled commercial banks had a risk weight of 125%. Clear that have a risk weight of 125%, which will be now reduced to the 100%. Clear. So it will be beneficial and it will lead to the increase in the liquidity in the market. Okay. So hope you are able to understand what is the actual meaning of the risk weight. So when the RBI has increased the risk weight on NBFC loan in November 2023, it means that bank have to hold more capital against those loans, making them less inclined to lend. Okay. So by reducing the risk weight now, the RBI is encouraging banks to lend more to the NBFCs as they need to hold less capital in the reserve. Clear, less capital in the reserve. Clear. And basically bank will also try to lend more because this is one of the safest lending. Okay, but they will earn less interest from NBFCs. Clear? So recently you will see that there is a less trend to lend to the NBFCs in place of the retail loans. Okay. So this is the brief discussion of the risk weight for the bank and the NBFCs. So for all the different types of the examination, JAB, CAP, certificate, promotion exam, you can join our special batches. For any query, you can mail on our email ID. Clear. Different types of the certificate course conducted by the IABF basically will also be prepared by the Shiksha 360. So thanks to all of you.